Ever wondered how the regulatory landscape is shaping up for cryptocurrencies globally? Today, we're diving into this very subject. It's no secret that the world of cryptocurrencies is a rapidly evolving space, with new digital assets, technologies, and trends emerging constantly. But what's equally fascinating, yet often overlooked, is the parallel evolution of crypto regulation. Crypto regulation, in essence, refers to the rules and guidelines set by governments and financial authorities worldwide to govern the use, exchange, and overall operation of cryptocurrencies. It's an essential aspect to consider, whether you're a seasoned crypto enthusiast or a curious newcomer, as it directly impacts how we interact with these digital assets. So what does the current state of crypto regulation look like worldwide? Well, it's a mixed bag, to say the least. Some countries have embraced the crypto revolution with open arms, implementing frameworks to foster innovation while ensuring consumer protection. We're seeing nations like Switzerland and Malta, often dubbed as crypto havens, leading the charge in this regard. On the other hand, there are countries that have taken a more cautious approach, implementing strict regulations or even outright bans in the name of financial stability and security. China's recent crackdown on crypto activities is a prime example of this. And then, there are those in between, the countries still grappling with how to handle this new digital frontier. They're in the process of understanding and drafting regulations, trying to strike a balance between encouraging innovation and mitigating risks. What's clear across the board, though, is the growing interest of regulators in the crypto space. We're seeing an increasing number of discussions, debates, and legislative actions around cryptocurrencies worldwide. This is a clear indication that the crypto world is no longer a fringe element, but a significant player in the global financial ecosystem. As we delve deeper, let's keep in mind, the world of crypto is as dynamic as it is exciting. Regulation is not a word crypto enthusiasts often like to hear, but why is it becoming increasingly relevant? As the crypto market matures and expands, the need for regulation becomes more pronounced. Think of it as a bustling city. As the population grows, so does the need for rules and regulations to ensure the safety and well-being of its citizens. Similarly, the burgeoning crypto market requires rules to protect its participants and ensure a level playing field. Now, the absence of regulation can lead to a Wild West scenario where the law of the jungle prevails. Market manipulation, scams, and frauds can run rampant, causing significant harm to individual investors and the market as a whole. We've all heard the horror stories, haven't we? Unscrupulous players taking advantage of the uninformed, market manipulation leading to drastic price swings, and the list goes on. But let's not dwell on the negatives. Instead, let's focus on how regulation can serve as a beacon of trust and legitimacy in the crypto space. Regulatory oversight can help weed out the bad apples, thus protecting investors and maintaining market integrity. It can also lead to greater transparency, as regulated entities are required to disclose specific information to the public and the regulators. Moreover, regulation can help foster institutional participation in the crypto market. Financial institutions, such as banks and pension funds, are often hesitant to participate in unregulated markets due to the associated risks. Regulatory oversight can assuage these concerns, paving the way for these institutions to enter the crypto space, thereby bringing in more liquidity and stability. So, while regulation might seem like a buzzkill to some, it's essential to remember that it's not about stifling innovation, but about ensuring a safe and stable market. Regulation, when done right, can be a catalyst for growth, not a hindrance. Remember, a well-regulated market is a safer market. Now that we understand the importance of regulation, what are the recent developments in the crypto regulatory space? The past year has seen a whirlwind of activity in the realm of crypto regulation. From the east to the west, governments and regulatory bodies have been taking a closer look at cryptocurrencies, each adopting their unique approach to this rapidly evolving industry. In Asia, China has doubled down on its stringent stance, with a sweeping ban on all crypto-related activities. This includes mining, trading, and even financial services involved in cryptocurrencies. The move has sent shockwaves through the global crypto market, prompting a significant relocation of mining operations to more crypto-friendly countries. On the other hand, Japan and South Korea have adopted a more balanced approach, implementing regulations aimed at protecting consumers and mitigating fraud without stifling innovation. They've introduced measures for enhanced transparency, stricter licensing requirements for exchanges, and robust anti-money laundering protocols. Across the pond in the United States, the regulatory landscape is a bit more fragmented. Different federal agencies classify cryptocurrencies differently, which leads to a complex and sometimes conflicting regulatory environment. However, there's a growing consensus on the need for clear and comprehensive crypto regulations to ensure investor protection and market integrity. In Europe, the European Union has proposed the Markets in Crypto Assets (MiCA) regulation. It aims to create a harmonized framework for crypto assets across the member states, ensuring investor protection, market integrity, and financial stability. Major financial institutions worldwide are also shaping the regulatory narrative. The International Monetary Fund and the World Bank, for instance, have called for global cooperation in regulating cryptocurrencies. They emphasize the need for a balanced approach, one that mitigates risks while fostering innovation. While the regulatory landscape is ever evolving, one thing is clear: the world is starting to take cryptocurrencies seriously. With all these developments, one can't help but wonder, what does the future hold for crypto regulation? As we gaze into the crystal ball of speculation and conjecture, it's clear that the world of crypto regulation is poised for change, and these changes could have profound impacts on the crypto market as we know it. Let's take a moment to speculate on possible future regulatory trends. We could see a push for more comprehensive laws that aim for better transparency and security in the crypto market. This could involve stricter Know Your Customer (KYC) and anti-money laundering (AML) rules, or perhaps even a standardized global framework for crypto regulation. The rise of decentralized finance (DeFi) and non-fungible tokens (NFTs) could also prompt new regulatory considerations. Now, how might these potential changes impact the crypto market? On one hand, tighter regulations could bring more legitimacy to the crypto space, potentially attracting more institutional investors and fostering greater public trust. On the flip side, too much regulation could stifle innovation and limit the freedom that makes the crypto world so appealing to many. And what does this mean for you? Well, as we move into this brave new world of crypto regulation, it's crucial to stay informed and prepared. Laws and regulations can change rapidly, and these changes can directly affect the value of your investments. So, whether you're a seasoned crypto enthusiast or a newcomer to the scene, it's essential to keep your finger on the pulse of regulatory developments. While the future of crypto regulation is uncertain, one thing is for sure: staying informed is the best way to navigate these uncharted waters. So, keep reading, keep learning, and most importantly, keep questioning. After all, in the world of crypto, knowledge is power. As we wrap up, let's recap what we've learned today about the world of crypto regulation. We've journeyed through the current state of cryptocurrency regulation, understanding how it shapes the environment in which these digital assets operate. We've seen how governments and regulatory bodies are grappling with this new frontier, striving to strike a balance between fostering innovation and protecting consumers. We've also delved into recent developments, highlighting the changes that are continually reshaping the crypto landscape. From increased scrutiny by regulators to growing demands for transparency and accountability, it's clear that the world of crypto is evolving at a rapid pace. And we've looked ahead to the future of crypto regulation, speculating on what lies in store for this burgeoning industry. While the path ahead may be fraught with uncertainty, one thing remains clear: regulation plays a pivotal role in the growth and stability of the crypto market. In fact, it's fair to say that regulation isn't just an extraneous element, it's an integral part of the crypto ecosystem. It provides a framework for operation, instills confidence in investors, and ultimately paves the way for mainstream adoption. But remember, the regulatory landscape is as dynamic as the crypto market itself. Changes can happen in the blink of an eye, and these changes can have far-reaching implications. So it's crucial for each one of us to stay abreast of these changes. Whether you're an investor, a trader, or simply a crypto enthusiast, being informed is key. So keep your eyes and ears open. Read widely, ask questions, and don't shy away from discussions. Because in the dynamic world of crypto, being informed is not just a choice, it's a necessity.